All right, let's get into Chipotle. I mean, Chipotle is going to be $1 trillion market cap.
Wrong to give us a big split because I said that individuals love splits even though they don't create value. Well, David, Chipotle's listening to this call. They're doing a 50 to 1 stock split. 50 to 1. And you can see what's happening. They're doing it so employees get stock and employees want to, this is much easier for employees to understand. But David, the individual wants this. The institutions hate it because it means more commission dollars. It hurts the S&P because for these index funds, because they add more friction. But the individual goes crazy. There is nothing new, David, with Chipotle. Nothing except for this 50 to 1. And look what it's doing. A 50 for 1, and the stock has a major move, 5%. This is what corporate America should be listening to. This is how you get individuals involved with your stock.
It's still that's still the case, even with all these short-dated options and all these other ways to do things. It still matters to people that you'd be able to buy something for $29 instead of $2,943.
That is the right question. But Doug McMillan at Walmart said that Sam Walton had done an analysis of this for his employees. There are people who understand this. They understand that there are sticky investors and there are fickle investors. The fickle investor, we should stop catering to them. They're the ones that don't care about this stuff at all. But the individual investor will buy Chipotle, put it away, and when the carne asada, when they get that chicken al pastor, which is really good, David, maybe they'll buy a couple shares. Have you had the al pastor?
No, I don't really I don't really go to Chipotle.
Good for you. Good for you.
Do you know what guac is?
What? Yes, I do.
Guac?
I know what guac is. I do.
Okay,
I do.
I just want to be sure because guac costs are higher.
Are they? Once again, the avocados are soaring again.
It's spiked a bit.
Yeah.
Mm-hmm.
Yeah. So Chipotle. Oh my gosh. Okay, let's speak about this for a moment. Chipotle. It should, in theory, have an epic crash. Should, in theory. But when you're doing all these tricks and gimmicks, now it's a 50 to 1 stock split. These help out the stock immensely. The stock's massively overvalued. Chipotle today trades at a far richer forward P than Nvidia. Let that sink in for a moment. Chipotle, with their minuscule growth, trades at a far richer forward P than Nvidia, than Meta. I mean, it's ridiculous. I mean, just insane. So, at some point, Chipotle is going to have an epic crash. But the timing is very, very difficult. I thought it's probably going to happen, probably this summer. But we'll see. We'll see. Ultimately, I think they're going to, miss a metric here and there. And next thing you know, that stock's going to go flying down. But I could be wrong. Maybe it just keeps climbing for all eternity. It never goes down. And, it can trade at 100 forward PE. Wingstop's another stock that is destined for an epic crash as well. But that's a subject for another day. Chipotle absolutely wrecking me like a wrecking ball right now. My gosh, it's ugly. I mean, this is a hedge I have on in the public account, and I'm just getting absolutely obliterated. I mean, those Chipotle puts already down another 34% plus here today, $6,400, just absolutely getting obliterated on that Chipotle hedge. So what happened? Chipotle came out, they announced a 50 to 1 stock split. You got to be flipping my flapjacks. My gosh, okay? Now, this does nothing to the fundamentals of the company, but it gets everybody all jacked up. People want to play the stock. 50 to 1 stock split. Oh my gosh, it's going to go up a bunch. And so naturally, people buy the stock, which makes the stock go up a bunch, right? It's like a self-fulfilling prophecy here. Now, in regards to Chipotle, the valuation is absolutely absurd on this company already. Never mind if it goes up even more from here in the short term. I mean, it's absolutely ridiculous. It's trading at 52 times this year's expected earnings. And then for 2025, we're at a 43 PE based upon 2025 earnings. And this is with a company with expected 13% revenue growth over the next couple of years, right? NVIDIA, these bears love to call NVIDIA bubble. Oh my gosh, all the bubble talk, right? NVIDIA trades at 35 times this year's expected earnings, right? Compared to a Chipotle that at 52 times. Next year, Chipotle in 2025 is expected, let's call it a 29 P based upon those numbers there. And we do know if one thing, NVIDIA beats earnings a whole lot more impressively than Chipotle beats earnings, right? And Chipotle's at a 43. So if you want to call NVIDIA a bubble, what do you call Chipotle? And here's the deal. NVIDIA's revenue growth, 82% expected this year, and only 19%. Last time I checked, 82% and 19% is a heck of a lot bigger than 13 and 13%, right? So, and then you think about the customer base. NVIDIA's customer base is the strongest of the strongest customers in the world, right? Amazon, Microsoft, Oracle, Google, McDougal, Meta, Tesla, the strongest companies in the world. And then you think about Chipotle's customers, it's the middle class, right? Which is fine. It's, people that make 40K to 50 to 150K a year, right? And as but with the middle class, it's like if people lose jobs, if anything happens there, right, inflation hits, then it can obviously negatively affect a company like Chipotle, especially with how much they've gone up on pricing. Those prices have gotten rich there. So the important thing to understand about this in regards to why do I look at a stock like Chipotle for a hedge, right? Even though it's absolutely not worked out so far, it's been just a disaster, right? The bottom line is Chipotle's priced for perfection now at this point in time. There's in the market we call when a stock gets at such a ridiculous valuation based upon its future growth, we call that price to perfection. And as long as every single thing is perfect for you, you can continue to have that stock go up. But the moment just any little thing goes wrong, the stock comes crashing down and it will fall 15, 25, 35% in a quick amount of time. I mean, we're talking in a matter of months. I'm not talking in a matter of years. It happens in a matter of months. This happens all the time in the stock market when something gets priced for perfection. So what I'm going to likely do is I'm going to continue to hedge against CMG. If the stock wants to go even higher and this valuation wants to get even more out of whack, it can do that in the short term, right? At some point in time, the cards will come crumbling down there. And as a hedge, I like it, right? The bottom line is with Chipotle, the stock will get wrecked if anything goes bad in the numbers. If the market goes bad, anything like that, Chipotle's going to absolutely obliterate it, which is why I like to hedge the portfolio overall, right? But for now, CMG's having a lot of fun. All the stock split talk. It's trading at about an $80 billion market cap now at this point in time and trading at a PE ratio of 65. So Chipotle can have all the fun it wants right now. And another stock that will likely come crashing down is Wingstop. Wingstop, oh my gosh. Look at the forward P. Look at the forward PEs on Wingstop. That's another wreck coming. But the timing's tough in regards to these, right? You might have to wait another 3 months, 6 months, 9 months, 12 months for the crash to happen. 1 month, we don't know. These type of stocks will come crashing down. These valuations have gotten absurd, and they're gonna come crashing down. But just getting the timing right is the difficult part with these sorts of stocks, right? That's why I don't like to focus on shorting. I hedge, right? Chipotle's a hedge. And yeah, if the market goes bad, those Chipotle print money. But as long as the market stays good, whatever I'm making in my portfolio is so much more massive. I mean, think about it. Today I was up, $42,000 in the public account, and that's with the $6,000 move down in Chipotle, right? So there's a little theory behind this. But by the way, in Wingstop, I mean, come on, man. At least Chipotle's got I think Chipotle's quality is pretty good. Wingstop. That quality, if anybody that thinks Wingstop's good has not had good chicken wings in their life. That's all I'm going to say about that, folks, okay? Chipotle.
Out here, Jim.
I went over to see the robotics section. It was rather amazing because the robotics, I think, are the ones that are going to be most improved by the new chip Blackwell. They're not there yet. They're doing mostly pedestrian things. When they're done, that bartender will be able to make me a much better drink than he made me yesterday. Or 2 days ago. That was a mocktail, by the way, just so people know.
Yeah, I know you're not drinking during the day, and there you are. That's
oh my gosh. Oh my gosh. Yeah, I know you're not drinking. That was the most BS thing I've ever heard in my life. If you say something like that, that person's a day drinker. I'm just gonna be honest with you. If you've got to say something like that, that person's a day drinker. 100%. Stop it.
Me yesterday. Or 2 days ago. That was a mocktail, by the way, just so people know.
Yeah, I know you're not drinking during the day, and there you are. That's wow. You're doing that's.
Well, that's me
Pro,
being
right?
me saying that Apple should be talking right now to Jensen because that's me in a Nissan car. I had no idea I was not in the car. That's cold rolled steel right there. There's me opening the trunk.
You had no idea you were in the car. What in the world, Kramer? Were you drinking?
You look very strange there.
There I am sitting in the bucket seat, trying to fix the seatbelt, and then ultimately I get out and I don't realize I'm not in the car, and I swing my leg as if I'm basically worried about hitting the rocker panels.
All right, we got a short time for stop trading. What do you got? Chipotle?
You know, I feel like there's an issue going on right now with how much a stock split really means. Watch Chipotle. I think it went up a huge amount because they announced the split. Now, of course, what you do need is some earnings or some upgrades. But I think that, David, we're going to talk about the split next week because it's the first time I've heard an actual economic reason for why it's justified. It's just so much easier to buy a stock with a large order if you do a 50 for 1. I can't wait to see you.
Yeah, well, you won't because I'm going to be away next
What a bunch of BS. What a bunch of freaking... oh, my gosh. What a bunch of BS. Oh, yeah, because the stock's struggling so much. Trading at its 52, 55, forward P, whatever it is. Yes. We need to help out that stock. Oh, my gosh. They're going through such big struggles. Come on, man. It makes NVIDIA look like the greatest deal in the history of mankind. NVIDIA is trading at a far cheaper forward PE than Chipotle, with ridiculous growth compared to Chipotle. I mean, give me a break. It's such a BS excuse. It's just another thing to try to pump the stock even more.
But what do you got tonight?
No, you're supposed to say you'll be off for the morning, for heaven's sake.
Oh, yeah, right. I'm on assignment. I'm going to be on assignment relaxing somewhere. What do you got tonight on the show? Yeah, thanks.
I've got Okta, which, by the way...
All right, let's get into this.
Dan, great to see you. First of all, do you have a position in Apple right now?
Yeah, it'll be confusing to your viewers, but we're actually long Apple, but we're short a bunch of their suppliers because we think that Apple's got fundamental issues going forward, and we'd rather attack it through their suppliers right now. We're looking, hopefully, for a bounce in Apple tomorrow, just because I'm sure everybody who's loved this will come out and defend it, and hopefully we get a bounce so we can sell it and short it again. So that's kind of how we're thinking about it from a bigger picture standpoint in terms of our position.
I mean, you don't think that this suit is in any way something to factor in when it comes to your long position in Apple. There are a whole host of other reasons why Apple may have its own issues right now.
Whoa. Hold your horses for just a flip and flapjacking moment. You got to understand what that man just said there, okay? I know that might have been hard to follow for some, okay? Basically, he's long Apple only for a short amount of time. He basically thinks like Apple's going to pop here over the next, I guess, trading day or two, and then he's right back out of it, and he said he wants to re-short it. So he actually wants to short Apple. And he mentioned about puts on Apple as well. So overall, he's negative clearly on Apple over the longer term, but he's maybe bullish for the next day or two. That's kind of his thought process in regards to that. So it's very important everybody understands where he's actually positioned.
I mean, so let me be clear about it. We dislike this stock fundamentally. We dislike it over the next year, etc. You asked me if I had a position in it. It's complicated, but yeah, we bought it towards the end of the day today. But I think if you sold this because of the DOJ, that makes little sense to me because we've known this was coming for a while. They've already lost a lawsuit against Epic in Europe. The App Store rates have already come down. If you are selling it because it's a bad chart, totally understand. If you're selling it because the fundamentals have been poor for a year now, and it's catching up with the stock and estimates have been coming down for a year now, totally get that. But if you're selling it off this DOJ thing, which is going to take years to sort out, that makes no sense. And with the 2 standard deviation move lower, we're like, we'll buy it for a trade and rent it. And hopefully if it goes up tomorrow, we'll sell it and short it again.
Yeah. Strategically, you've been trading from the short side well, by the way. As Tim said, it's underperformed for quite some time. So understanding you're going to look for entry levels and exit levels. What's your ultimate price target on the downside where if it got there, you're like, okay, this is an entry point for now being on the long side and trading around a long position?
So here's the way I think about it. From a long-term perspective, this stock should have a below market multiple. The revenues have not, if you look at what they guided to for the March quarter, they're almost the exact same number as 3 years ago. They have competition issues with Huawei coming back. They don't need U.S. chips to make smartphones anymore. And so I look at it trading at a 25 PE versus the S&P at a 22 PE with hardware companies in the PC ecosystem, for example, trading, in the low double digits. And so I look at this and I say it deserves less than a market multiple, given especially that their high margin revenue stream in services is under attack as well. So from the short side, from a long-term view and a fundamental view, it's nowhere near where I would think this is a fundamental long.
Hey, Dan, it's Tim. Thanks for joining us. In terms of the market's not a zero-sum game, but we often talk about Apple as being such a critical stock for the market. Do you think Apple's weakness actually could be positive for the market? I know this sounds obtuse, but to the extent that we're seeing broader allocation, Apple certainly derives a lot of passive flows, but it also certainly has folks that will be allocating this money to other places that they can find. Again, what is Apple for people? Yeah, it's a market proxy, it's a market weight, but it's maybe consumer staples, maybe it's consumer discretionary. Just thoughts on
where does this money go, right? You sell out of Apple, where does that money go? Well, I'll tell you exactly where that money goes. That money goes into NVIDIA. That money goes into Meta. That money goes into Mr. Softy and stocks like that, right? That's where that money goes at the end of the day. People just find another opportunity in kind of the big tech space. So they sell at Apple, they go buy one of those.
The bigger picture of Apple's role in the market.
I think you're 100% right, Tim. I mean, markets are never good when they go straight down based on the Fed and they go straight up based on the Fed. You can look at the last 2 years, that's the situation, right? Magnificent Seven down 46% in 2022. Then they're up 111% in 2023. Why? The Fed had the fastest rate hikes in history in 22. They stopped in 23, and people were at one point looking for 7 rate cuts.
I completely disagree. If you want to chalk that up to just being the Fed, that's wrong. Look at earnings. What happened to big tech earnings as 2022 rolled along? Go back and look at all big tech earnings. They started to go down and down and down and down and down, and it was looking worse and worse and worse for them. And then they bottomed at the beginning of 2023, and then guess what happened? The earnings started going up and up and up. Everything started looking better. We know the AI wave came. Look what happened to NVIDIA's earnings, Meta earnings. I mean, pretty much every company across the board, other than maybe Apple, it got better and better and better. And maybe, Tesla, you can make an argument that it got worse. But the majority, it got better and better and better. As 2023 went along, it got worse and worse and worse. As 2022 went along, and no one wants to invest into a market where things are just getting worse and worse and worse. They want to invest into markets that things are getting better and better and better.
Right now, the market's actually really healthy because Tesla stock's down 30%. Estimates were coming down for a year. Apple estimates have been coming down for a year, but the stock was up 48% last year. This year, however, you've got Apple down 10%, you've got Tesla down 30%. And which stocks are performing the best? Well, the ones that took up numbers the most. NVIDIA up 80%, Meta up another 40%, and then you got Microsoft and Google and the others kind of in the middle. So the market is reacting to fundamentals the way it should versus some pipe dream about, augmented reality is going to be great a decade from now or something like that. This is actually a healthy market. And to your point, the money's finding its ways into other areas. We own several industrial stocks that we like. We own some financials that we like. We own some biotech. And you're seeing the market broadening. And I think that's super healthy, whether you're talking about it coming out of Apple or Tesla or you pick your favorite name.
So he talks there at the end, obviously, about this being a healthy market, right? And there's a lot of bears that will push against that. They say it's a bubble market, it's crazy, these sorts of things. And if you hear the bear case, that's a lot of that. What do I feel? Do I feel like this is a healthy stock market we're in right now? In financial market in general, do I feel like this is very unhealthy and we're going to have big problems coming here? Okay. My opinion is when I look at the overall financial space, including the stock market, I see pretty healthy overall. And the reason I see pretty healthy is when you look at earnings growth is very nice for especially a lot of the biggest stocks that matter to the market at the end of the day, right? Maybe not Apple and Tesla, but outside of those two, I mean, you start going through the stocks in a lot of the biggest market caps in the NASDAQ, in the S&P 500, earnings growth looks very good. And that's good for them for at least this year, right? Who knows what happens a year from now, 2 years from now, 5 years from now, right? But for now, that's really good. On top of that, we have serious money on the sidelines, right? Literally all-time record highs, and that money's going to continue to build here because of all the interest being paid out to it. So that's very good, right? And so margin debt, if you look at margin debt, it hasn't gotten out of hand as a percent of the stock market. So when you look at all those kind of factors, actually, we're looking pretty decent as far as a healthy market, right? And that could change. That could change 12 months from now, 24 months from now, 36 months from now. But for now, it looks pretty darn healthy.